Welcome to Earnings Central. In this video, we'll break down Veritone, Inc.'s fourth quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $20.7 million. The company actually reported revenue of $22.4 million, surpassing expectations by 8.2%. However, this quarterly revenue marked a significant 34.5% decrease compared to the $34.2 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was a loss of 22 cents. The company actually reported a loss of 20 cents, exceeding expectations by 2 cents per share. However, this result reflects a 4-cent per share larger loss than the loss of 16 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. First, let's talk about Veritone's impressive data processing capabilities. In 2024 alone, Veritone processed over 10 petabytes of data, including more than 58 million hours of video and audio. This demonstrates their ability to operate AI at truly enterprise scale, utilizing over 862 unique AI models through their aiWARE platform. A significant strength in their business model is their customer diversification. After divesting their media agency, Veritone has no customer exceeding 5% of their total revenue. This reduces their dependency risk and creates a more stable revenue foundation. On the public sector front, Veritone has built an impressive sales pipeline exceeding $110 million. They're in active contract phases with various U.S. federal government agencies and international public safety customers, representing enormous growth potential in the coming quarters. Despite industry challenges, Veritone maintained a gross revenue retention rate above 90%, demonstrating strong customer loyalty and product stickiness. This is particularly impressive considering the company's transition away from consumption-based revenue models toward more stable subscription-based offerings. From a profitability perspective, Veritone achieved a non-GAAP gross margin of 71.6% for the full year 2024. While this was down slightly from 72.3% in 2023, management expects margins to improve throughout 2025 as newer products like VEDR mature and higher margin contracts scale up. Finally, Veritone has significantly strengthened its balance sheet by reducing debt from a peak of $201 million in 2021 to approximately $132.6 million at the end of 2024. This reduction provides greater financial flexibility and reduces interest burden as they pursue growth opportunities. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The most transformative move Veritone made in 2024 was the divestiture of Veritone One, their legacy advertising agency. This transaction generated up to $104 million in cash, with $86 million received at closing and another $18 million subject to 2025 performance. The sale allowed Veritone to pay down debt and focus resources on their core AI business. With this divestiture, Veritone has completed its transformation into a pure-play AI enterprise software company. CEO Ryan Steelberg emphasized that they're now positioned to become the leading enterprise AI software applications and services provider across commercial and public sectors, with over 3,200 customers remaining post-divestiture. One of the most exciting developments is the launch of Veritone Data Refinery, VDR, a new platform designed to help enterprises transform unstructured data into high-quality AI-ready assets. VDR is already in full production and working with major hyperscalers and generative AI model companies, generating revenue that exceeded management's expectations in its first quarter. The near-term sales pipeline for VDR already exceeds $5 million. For 2025, Veritone expects its public sector business to grow between 100% and 150% year-over-year. This growth will be led by deals across the Department of Defense, public safety agencies, including international expansion into Europe, and through expanded partnerships with AWS and others. Management was clear that these initiatives are unlikely to face scrutiny from the new presidential administration. A key driver of public sector growth is Veritone's Intelligent Digital Evidence Management System, EDEMS. This platform is strengthening Veritone's position in the digital evidence management market by aggregating, analyzing, and sharing investigation materials with advanced AI-powered video and audio analytics. EDM's customers include hundreds of local law enforcement agencies with recent deployments in both FedCiv and FedDoD intelligence agencies. Finally, with substantial cost reductions enacted over the past 2 years and improved financial flexibility, Veritone has provided a clear pathway to profitability as early as fiscal 2026. The company has executed over $40 million in annualized cost savings since 2023, including $17 million in 2024 alone, which included a 15% reduction in their global workforce. For fiscal 2025, Veritone projects revenue between $107 million and $122 million, representing a 24% increase year-over-year at the midpoint. Non-GAAP net loss is expected to improve by 46% at the midpoint, demonstrating their progress toward profitability. In conclusion, Veritone's earnings report shows a company that has successfully transformed itself into a focused AI enterprise software provider. While revenue was down in 2024 due to the transition away from consumption-based customers, the company is well-positioned for strong growth in 2025 driven by its data refinery platform and public sector opportunities. With a strengthened balance sheet, diverse customer base, and clear path to profitability, Veritone appears to be turning the corner on its multi-year transformation. That wraps up our recap of Veritone, Inc.'s fourth quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.